Welcome to Module 2, Modified Adjusted Gross Income, otherwise known as MAGI. Topics that we will cover in this training module include MAGI introduction, earned income, self-employment income, non-countable income, educational income, income of a tax dependents or children 18 or younger, and deductions. As a note, additional training on how to enter common income types into Washington Healthplanfinder and other system functionalities are discussed in Module 6 of this training series. We will start with an introduction of what is Modified Adjusted Gross Income, or MAGI. MAGI Methodology. Modified Adjusted Gross Income is how income is calculated to determine eligibility for MAGI-based Washington Health Medicaid programs and the Children's Health Insurance Program, CHIP, or Apple Health for Kids with premiums. Generally, the MAGI calculation is determined by calculating an individual's adjusted gross income, AGI, as determined by the Internal Revenue Code, IRC, with a few modifications. Adjusted gross income. What is adjusted gross income? Adjusted gross income, or AGI, is the total gross taxable income minus any IRS allowable adjustments. An individual's adjusted gross income is reported on line 11 of IRS Form 1040. What turns AGI into MAGI? MAGI is the adjusted gross income, or AGI, increased by interest, which is any amount of interest received or accrued by the taxpayer during the taxable year, which is typically exempt from tax. It's also increased by Social Security and railroad retirement, any amount of Title II Social Security income or Tier 1 railroad retirement income, which is excluded from gross income under Section 86 of the IRC. It's also increased by foreign income, which is any amount excluded from gross income under Section 911 of the IRC. These income types are typically excluded when determining an individual's AGI, but are considered towards the gross countable income when determining eligibility for MAGI-based Apple Health coverage. What else turns AGI into MAGI? MAGI does not include educational income, which is scholarships or fellowship grants used for educational purposes, as described in Washington Administrative Code, or WAC 182-509-0335. It also does not include American Indian or Alaskan Native income, which is most sources of income received by American Indian or Alaskan Native individuals, as described in WAC 182-509-0340. Also does not include lump sums, which is income received as a lump sum, as described in WAC 182-509-0375, which is counted as income only in the month it is received. Also does not include income of tax dependents or children age 18 or younger. Some income received by tax dependents or children age 18 or younger, as described in WAC 182-509-0360, is excluded if it does not meet the tax filing threshold. These income types are not counted when determining an individual's gross countable income for MAGI-based Apple Health coverage. Deductions. The AGI calculation includes certain allowable deductions that reduce the total gross income. These deductions follow IRS rules. Some deductions may have annual limits or are variable. These IRS allowable deductions are also used to reduce the total MAGI. Deductions will be discussed in more detail later in this presentation. 5% FPL income disregard. Countable MAGI is reduced by an amount equal to 5 percentage points of the federal poverty level, FPL, based on the household size to determine net income. An exception for recipients of parent caretakers, medical, or NO1 do not receive this income disregard unless they are receiving Medicare. For more information, see WAC 182-509-0300. This is a generalization of how income is calculated for MAGI-based Apple Health coverage. The gross countable income is reduced by IRS allowable deductions and the 5% FPL income disregard to calculate the total modified adjusted gross income, or MAGI. The total MAGI is used in conjunction with the individual's tax filing status, age, and relationship to the primary applicant to determine eligibility for various Apple Health coverage programs. Point-in-time methodology. Next, we will discuss the point-in-time methodology. Point-in-time income. This is income that is received or likely to be received in the month a person applies, renews coverage, or has a redetermination of Apple Health coverage. A point-in-time calculation can be used to determine a person's countable income. For more information, see WAC 182-509-0310. Point-in-time calculation. The following calculations are used to determine a person's countable income when they are paid more than once per month. If they're paid weekly, you'll multiply the weekly expected income by 4.3. If they're paid every other week, multiply the expected income by 2.15. If they're paid twice per month, multiply the expected income by 2. For those paid less than once a month, individuals can use an average to calculate the monthly income. The monthly average is the total income for a period divided by the number of months in that time frame. A common example of when to calculate using a monthly average is seen with those who earn self-employment income. These individuals' earnings may be received on an infrequent or inconsistent basis, so using a monthly average calculation may be the best way to accurately calculate that. Point-in-time calculation. When reporting income for individuals whose income varies seasonally, individuals can choose to use either the point-in-time methodology or by calculating the monthly average. For example, an individual fisher works seasonally over the summers and the family lives off the income for the remainder of the year. In this instance, it could be in their best interest to take an average of income for the year to determine the individual's eligibility, or if it is more beneficial to the individual, they can use a point-in-time calculation stating $0 during the months they are not working as a fisher, and then report monthly earnings during the summer months. Earned income. Earned income is income received from working, which may include wages, salaries, tips, commissions, bonuses, and profits from self-employment activities. The taxable gross amount of earnings are used to determine eligibility. For more information, see WAC 182-509-0330. Self-employment income. Self-employment income is earned by an individual from running a business, performing a service, selling items that are made, or reselling items with the intent to make a profit. This income can be earned if the person is performing a trade, in business as a sole proprietor or an independent contractor, member of a partnership that carries on a business, or otherwise in business for themselves. For more information, see WAC 182-509-0365. Determining self-employment. Self-employment income is determined using an individual's most recent federal tax return unless the individual does not file taxes, the individual has not been in business long enough to have filed a tax return for their new business, or the most recent tax return is not a good reflection of their current income. If any of these conditions apply, individuals can report their income using their most recent 3-month profit and loss statement. Calculating self-employment. Net self-employment income is used to determine eligibility for MAGI-based Apple Health programs. To determine the net self-employment income, start with the gross self-employment income and subtract any IRS allowable business expenses. This amount is the gross countable income that we discussed earlier in this presentation. The net self-employment amount, or gross countable income, is further reduced by the IRS allowable deductions and the 5% FPL income disregard to figure the total MAGI. Self-employment income. Here are some common examples of self-employment for individuals: babysitting, driving for Uber or Lyft, renting out a room, reselling items, owning their own medical practice, and being a shareholder of their own corporation. Sole proprietorship. This common business structure is simple to form and operate. The individual is in business alone and personally liable for all debts incurred by the business. Those that receive royalties or operate a limited liability company, LLC, may choose to file taxes as a sole proprietor. Some sole proprietors may not file a tax return as they only provide part-time or infrequent services. Sole proprietorship tax forms. Business profit or loss is calculated and reported using IRS Form Schedule C. The total business profit or loss is reported on IRS Form Schedule 1, Line 3, along with other income and adjustments to income. The total of all other income types were reported on IRS Form Schedule 1 and shown on Line 8 of IRS Form 1040. Partnership. Partnership is income received from a business when a relationship exists between two or more persons who join to carry on a trade or business. Each person contributes money, property, labor, or skill and expects to share the profits and loss of the business. The different types of partnerships can include general partnership, limited liability partnership or LLP, and limited liability limited partnership or LLLP. Partnerships are required to file their own tax return using IRS Form 1065, U.S. Return of Partnership Income, and pass any loss or gains down to the partners. Some common examples of partnerships include real estate businesses, dance studios, medical or legal practices, marketing firms, or small retail stores, just to name a few. Partnership tax forms. Partnership income or loss is calculated on IRS Form 1065 Schedule K1 and reported on the individual's tax return or page 2 of IRS Schedule E, Form 1040. The total partnership income or loss is reported on IRS Form Schedule 1, Line 5, with other income and adjustments to income. The total of all the other income types reported on IRS Schedule 1 is shown on Line 8 of IRS Form 1040. Corporation. Corporations have a more complex business structure. Shareholders or owners of the corporation are employees of the corporation that receive wages and can receive additional income from the corporation. Any debts incurred by the business are liable to the corporation and not the shareholders. The types of corporations can be C corporations, S corporations, nonprofit, and some limited liability companies or LLCs. Most corporations are required to file a tax return and will do so using IRS Form 1120 U.S. Corporation Income Tax Return or 1120S U.S. Income Tax Return for an S corporation. Commonly seen examples of corporation income are from gas stations, general stores, real estate businesses, insurance agencies, chiropractors, dentists, just to name a few. Corporation tax forms. Shareholders of an S corporation will receive a Schedule K1 Form 1120S indicating their dividends received and percentage of the corporation owned. The corporation's gains or losses and shareholders' dividends will be reported on an individual's tax return on page 2 of IRS Form Schedule E. These amounts are included on line 5 of IRS Form Schedule 1 and totaled with other income types. Employees of a corporation will receive wage stubs and IRS Form W-2 with the totals reported on line 1 of IRS Form 1040. It is not uncommon for shareholders of a corporation to also be an employee of that corporation and thereby receive both wages and dividends. Rental income. Rental income is income or services received from the use of real estate or personal property. This income is considered earned when you received it, not when it was incurred. Security deposits are not considered income unless it is not returned to the tenant, and any expenses paid by the tenant are considered income. Rental income can include royalties, typically property royalties. This income type may not be required to file taxes. Examples of rental income include renting out a room of your house, leasing a part of your property, or having numerous rental homes. Rental income tax forms. Rental income is filed on Schedule E and reported on line 5 of Schedule 1. Royalty income for property royalties are similarly reported using the same forms. Farming. Farming income is profit or loss incurred through the operation of a farm or other agricultural business. This can include income received from operating stock, dairy, poultry, fish farming, or operating a plantation, ranch, range, orchard, or grove. This can also include the sale of crop shares if the individual participates in producing the crop. Those with farming income are not required to file a tax return. Farming tax forms. The farming income is filed on Schedule F and reported on line 6 of Schedule 1. This does not include income received from tribal activities since that is not taxable. Unearned income. In this section, we will go over the common types of unearned income. What is unearned income? Unearned income is received from a source other than employment. Common examples of unearned income include Title II Social Security benefits, unemployment compensation, interest income, pensions, annuities, and IRAs, dividends, military retirements, alimony, and rental income. For more information, see WAC 182-509-0325. Title II Social Security benefits. Social Security benefits are payments administered by the Social Security Administration, SSA, based on age, survivor status, or having a disability. Although Title II Social Security benefits are typically exempt from a person's adjusted gross income for tax purposes, this income is counted for MAGI-based Apple Health. Countable Title II Social Security benefits include retirement benefits, disability benefits known as SSDI, dependent benefits, and survivor benefits. SSDI versus SSI. Sometimes there is confusion between Title II Social Security Disability Insurance Benefits, or SSDI, and Supplemental Security Income, or SSI. Both are disability payments received from the Social Security Administration, but only SSDI payments are countable income from MAGI-based Apple Health. SSI recipients automatically receive Apple Health Classic Medicaid and are not eligible for MAGI-based Apple Health coverage. Take a moment to review this chart to familiarize yourself with the differences between SSDI, which is countable, and SSI, which is non-countable. Title II SSDI benefits. Social Security benefits are reported on line 6A of IRS Form 1040. Only the taxable amount is listed on line 6B, but all benefits are countable. SSDI recipients receive an annual benefits letter that can also be used to verify income. Dividend income. Dividends are the distribution of property paid out to shareholders of a corporation or to individuals with an interest in an estate, trust, S corporation, or other associations that are taxable as a corporation. Though most dividends are paid in cash, shareholders could receive other property, services, stocks in lieu of cash. Dividends are taxable income and countable for MAGI eligibility. Dividends. Qualified and ordinary dividends are listed separately on the IRS 1040 tax form, but the total dividend amount is included on line 3B. Pensions, annuities, and IRAs. Pensions, annuities, and individual retirement accounts, or IRAs, are fixed sums of money paid out to an individual for the rest of their life. Examples of this type of income include 401k distributions, pensions, annual lottery payouts, etc. Generally, these income types are taxable and countable for MAGI eligibility. Though there are exceptions, the rules are complicated and depend on the individual's circumstances. Pensions, annuities, and IRAs. IRA distributions are listed on line 4A and 4B of IRS Form 1040. Use the taxable amount on line 4B. Pensions and annuities are listed on line 5A and 5B of IRS Form 1040. Use the taxable amount on line 5B. Capital gain or loss. What is capital gain or loss? This is the financial gain or loss from the sale or exchange of a capital asset. Capital asset includes physical properties such as your home or car, as well as investment properties such as stocks and bonds. The frequency of this income type depends on the individual's circumstances. The income can be received at one time or expected to be ongoing and continue over a length of time. Capital gain or loss. Examples of countable capital gains and losses include a sale of assets for a business that is still operating, sale of a house by an individual who owns numerous homes, sale of stocks, shares, or other investment property, and the capital gain or loss is ongoing. Examples of non-countable capital gains and losses include sale of assets for a business that is no longer operating, one-time sale of home or property, and the capital gain or loss is a one-time occurrence. Capital gains and losses. A capital gain or loss are listed on line 7 of IRS Form 1040. Interest income. This income is earned from investments that pay interest, such as savings accounts, money market accounts, or certificates of deposit. For the purposes of MAGI eligibility, all interest income received or accrued is countable, regardless of whether it is taxable or not. Interest income. Tax-exempt interest is listed on line 2A of Form 1040, but for MAGI-based alcohol programs, all interest income is countable. Use the amounts listed in boxes 2A and 2B. Alimony income. What is alimony income? This income is received from a current or former spouse as a result of a divorce decree or separation agreement. This income does not include voluntary payments made or child support payments. Alimony income is taxable and countable for purposes of determining MAGI eligibility. To be taxable and countable, the alimony agreement must be unmodified and established by December 31st, 2018. Alimony income is listed on line 2A of the IRS Schedule 1 form. This amount is included in the total amount on line 8 of IRS 1040 form. Unemployment compensation. Unemployment compensation is temporary income received under the joint federal-state compensation laws to replace lost wages for workers who have become involuntarily unemployed. Unemployment compensation benefits are paid to the individual by the state or District of Columbia for DC residents and is countable income for determining MAGI eligibility. Unemployment compensation. Unemployment compensation is listed on line 7 of IRS Schedule 1 form. This income type is included in the total amount on line 8 of IRS 1040 form. Other countable income or loss. Other sources of less common countable income may include per capita income, jury duty pay, whistleblowers award, compensation for donations such as blood, plasma, egg, embryo, or sperm, and unearned income in kind. Other income. Other taxable and countable income is listed on line 9 of the IRS Schedule 1 form. The other income types are individually listed on lines 8A through 8Z, which are totaled on line 9. This income type is included in the total income on line 8 of IRS 1040 form and calculated along with the other additional income types included on that line. Foreign income. Foreign income. What is foreign income? Foreign income is income that is typically excluded from a person's AGI under Section 911 of the Internal Revenue Code, but is countable income for MAGI-based Apple Health. This can include any earned or unearned income from a foreign source, including wages, salaries, pensions, annuities, and housing. Some common examples of foreign income include a Canadian pension, earned income from a Chinese company, dividends from Macau shares, or rental income from a property in a foreign country. Note that all money received is converted into US dollars at the current exchange rates. For more information, see WAC 182-509-0300. Non-countable income. Now we will discuss non-countable income sources. Non-countable income. For the purposes of MAGI eligibility for Apple Health, some types of income are not counted. These income types are not collected or asked for in Washington Healthplanfinder during the application process. Income that is not countable may include bona fide loans, child support payments, needs-based assistance from other agencies, veterans disability and educational benefits, L&I benefits, and death benefits from life insurance. For more information, see WAC 182-509-0320. Educational income. Educational benefits. Income from educational assistance programs that is used for educational purposes and not living expenses is not countable. These can include programs administered by the Title IV of the Higher Education Amendments, Department of Education, Department of Veterans Affairs, Bureau of Indian Affairs, and Carl D. Perkins Vocational and Technology Education Act. For more information, see WAC 182-509-0335. Educational benefits. In addition, scholarships, awards, or fellowship grants used for educational purposes and not living expenses are not countable income for MAGI-based Apple Health programs. Common examples include Pell Grants, State Need Grant, GI Bill payments, or state and federal work study. American Indian and Alaska Native income. For MAGI-based Apple Health, the following American Indian and Alaska Native income is excluded: distributions from Alaska Native corporations or settlement trusts, distributions from property held in trust or within current or prior boundaries of reservation, rents, leases, royalties, or natural resource extraction or harvest from reservation or trust land, or from federally protected rights regarding off-reservation hunting, fishing, gathering, or usage of natural resources. Payments related to culturally significant items, practices, or rights that support traditional lifestyles. Educational assistance from Bureau of Indian Affairs, and other exclusions as provided by federal law, regulation, or rule. Take some time to review this chart depicting the different types of American Indian and Alaska Native income that can be earned and whether that income is countable for MAGI-based Apple Health programs. Note that only income from per capita tribal gaming is counted for MAGI programs. Lump sums. What is a lump sum? A lump sum is a one-time payment received that is not expected to continue or anticipated to be received again. A lump sum is only countable if it is a countable source of income and it is received in the month of application. For more information, see WAC 182-509-0375. Lump sums are difficult to understand, so let us walk through some scenarios to get a better understanding. Lump sum scenario 1. Josephine applies for coverage in February. In March, Josephine receives $12,000 from a fishing job in Alaska where she fishes twice a year. Is this income countable and a lump sum? Yes, this is countable earned income. This is not a lump sum since it is not received just one time, but is ongoing or anticipated to be received again. Additionally, since Josephine is paid less than once per month, an average would be used to calculate her monthly income at $1,000 per month. Lump sum scenario 2. Maria applies for coverage in July. Maria sells her home in that same month and receives a capital gain of $10,000. This is Maria's only home, and she does not anticipate any more home sales in the near future. Is this income countable and a lump sum? Yes, since the capital gain is a lump sum payment, this income is countable in the month of application only. This income is not countable in the ongoing months. Income of tax dependents or children age 18 or younger. Income of tax dependents or children age 18 or younger is only countable when it meets the tax filing threshold for a tax filer. This rule applies regardless if the individual expects to file a federal tax return or not. An exception, Social Security income of tax dependents or children age 18 or younger is not counted. Here are the 2021 tax filing threshold requirements for income of tax dependents of children age 18 or younger. Take note that there are different limits for earned and unearned income. As a reminder, Social Security income of a tax dependent or children age 18 or younger is never counted because the tax filing threshold for this income type is so high. Deductions. Deductions are IRS allowable adjustments to income that reduce an individual's taxable income. For MAGI-based Apple Health programs, these deductions are allowable and follow the same IRS rules and limits. Some deductions have yearly limits and others may vary. Deductions are annualized through an individual's certification period. For more information, see WAC 182-509-0300. Deductions tax form. IRS allowable deductions are listed on Part 2 of IRS Tax Form Schedule 1. These deductions listed on lines 11 through 25 are used to reduce the individual's tax liability and are discussed in more detail over the next slides. Line 26 is the total adjustment to income that is reported on line 10 of the IRS 1040 tax form. Educator expenses deduction. This deduction is for unreimbursed educator expenses such as books, supplies, and other equipment. The individual must be a licensed educator teaching K through 12 and work 900 plus hours per school year. The current limit is $300 a year for this deduction, or $25 a month for each educator. Certain business expenses of U.S. reservists, performing artists, and fee-based government officials. This deduction is for U.S. reservists, performing artists, or fee-based government employees who have expenses necessary for their job, including travel of more than 100 miles. The maximum amount of this deduction is variable. Health savings account deduction. This is a deduction for pre-tax or tax-deductible contributions made to a health savings account while enrolled in a high-deductible health plan. The current maximum deduction amount for an individual is $3,650 per year, or for a family, $7,300 per year, and an additional $1,000 a year contribution is allowed if the individual is age 55 or older. Moving expenses for armed forces. This deduction is for moving expenses only for active duty members of the armed forces that are ordered to move because of a permanent change of station. The maximum amount of this deduction is also variable. Self-employment tax. This deduction is for tax paid to the federal government to fund Medicare and Social Security for self-employed individuals who net more than $400 per year, or employees of churches or church organizations with income of more than $108.28 per year. The maximum amount of this deduction is also variable. Self-employment retirement plan. This deduction for contributions made to a self-employment retirement plan, including SEP, simple, or qualified plan. Self-employment health insurance deduction. This deduction for contributions made to self-employment health insurance plan. The maximum amount of this deduction is also variable, but it is limited to the net profit of self-employment business. Penalty on early withdrawal of savings. This deduction for penalty on early withdrawal of funds from a certificate of deposit or other deferred interest account before maturity. The amount of this deduction is variable. Spousal support or alimony. This is a deduction for court-ordered spousal support or alimony. It does not include voluntary alimony payments or child support payments. This deduction is only allowable if the divorce decree was established prior to January 1st, 2019. The amount of this deduction is variable. Pre-tax retirement account. This deduction for contributions made to a pre-tax retirement account. It excludes Roth IRA or simple IRA contributions. The current maximum deduction amount for age 49 and below is $6,000 a year, or for those age 50 or older is $7,000 a year. Student loan interest. This is a deduction for interest paid on student loans used for qualifying educational expenses while attending an educational institution. Principal payments are not deductible. The loan payments must be for the individual, their spouse, or their tax dependents for tax filers, or their children in the household for non-filers. The current maximum amount for this deduction is $2,500 per year. Next up is the available list of resources related to the information relayed in this presentation. For additional materials and resources regarding MAGI income, visit the Healthcare Authority web pages listed on this slide. For community partners, Healthcare Authority has made available a team of eligibility policy representatives to provide assistance for questions regarding eligibility and assistance with Washington Healthplanfinder applications. These representatives serve specific counties. For more information about the Washington Volunteer Assister Program, contact us at HCA Volunteer Assister at hca.wa.gov. Congratulations! You've completed Module 2 of HCA Community-Based Training. Please continue to Module 3 of the 7-module HCA Community-Based Training.